Financials led the way today. Energy lagged again, and earnings season is about to kick off. And that's notable because financials are kicking it off in a very big way over the next 2 days. So a lot of the big banks starting this earnings season. Welcome to our market outlook preview video, 5-minute preview. The full version of the market outlook, as well as the trade ID that we do on a daily basis, is available for you at marketscholars.com. You can get to that in the link down in the description or in the pinned comment below. The big focus today, the S&P 500 holding firm near highs as investors brace for the start of earnings season. That's our big focus. Big banks like JP Morgan, Citigroup, Goldman Sachs, Wells Fargo, Bank of America, you name it, they're all expected or scheduled to kick things off over the next couple of days. And financials are already leading the markets going into those reports, with XLF bouncing off this low point, showing some strength ahead of those key earnings catalysts. On the other end of the spectrum, energy stocks remain weak, kind of holding some highs, the recent highs here from last options expiration as crude oil fades a little bit. The sector's underperformance continues to weigh on overall breadth. Yields tick slightly higher, the 10-year yield creeping up as traders are balancing this expectations for softer inflation data with what the Fed's expected to do with and when they're expected to start their rate cut cycle. Volatility jumped, but still remains relatively subdued, hovering near the lows as the market still is pretty calm. At 17, easily below its moving average, easily below 20, signaling a little bit of calm again as the market awaits for these earnings headlines to start hitting the tape. So the tone here is cautious as we just as we've been so bullish here, but steady, sideways and steady, not showing any signs necessarily of weakness yet. Of course, the next catalyst that we'll have for anything that can shake things loose is this earnings season. So let's talk about what comes next. But before we do, really quickly, as always, if you like these videos, hit that thumbs up, like the video, subscribe to the channel, hit that bell so you know when the videos are posted, comment and share the video with anybody else. As always, as I always let you know, that's a really big help for us and helps us get the word, our market outlook out to everybody out there that may be interested. All right, so where does that leave us heading into the rest of this week? And the key focus right now is the financial sector. We're seeing the sector trying to stabilize after a little bit of a rough stretch here where we were down, 3 or 4 days after those all-time highs, the pre-July 4th all-time highs. Big banks, of course, kicking off earnings season over the next couple of days. I think that's where our next big move will come from. XLF has been kind of stuck in this range, but at these 52-week highs here. Today's small rebound, 0.75%, showing investors are watching closely, but not quite yet committing ahead of what could be some important news over the next couple of days. Meanwhile, the broader market, the S&P 500, continues to hover right around these highs over the past couple of days, not necessarily getting any strong leadership necessarily from the typical technology sector. Communication services did okay today. Discretionary did somewhat okay, but financials aren't leading. Energies, of course, not leading. So we're kind of in a little bit of a holding pattern here, but at least we're easily above this rising 20-day, in this case, 20-day exponential moving average that's in between both the Keltner channel and the Bollinger Bands as we trade near the top of both of those volatility channels. So what this tells me is the market here is waiting. It's we've had a nice little run coming off of the tariff announcements. I know that tariffs have been in the headlines here lately, but the market really is waiting for how are earnings going to be impacted by these tariffs that are expected to be coming through here in August. Waiting for some guidance from these banks, the first sector really to get through the season, and wanting to see if financials can lead breadth to expand again in the S&P 500. So it's a good time to stay somewhat nimble, watch some of these important levels I break down in the full market outlook video, and prepare for this volatility that could kick up normally this time of year that happens to be coinciding with the beginning of the second quarter earnings season. So inside today's full market outlook video, I go in a lot more detail in terms of some really important intermarket relationships that kind of show some interesting patterns today, as well as I break down the breadth in a lot more detail in terms of how bullish we are, and are we seeing any cracks beneath the surface, so to speak. If you want access to that full video, as well as the trade idea that we do and track daily in the daily market outlook video, market outlook live video, that has a trade tracker on the market outlook live page. You get all of that at marketscholars.com. It's available for all of our subscribers, starting with our foundation, Market Outlook Foundation tier. You can join today for just $29 a month, unlock that full video, and get access to all of our videos on a daily basis, as well as all the trade ideas we do day after day. And you can see the performance and how they do. We manage those trades from start to finish every day during the Market Outlook Live. The description to both the Market Outlook Foundation page is down in that description below, again, as well as in the pinned comment. Thank you very much for watching tonight. I do appreciate your time on a Monday night. Remember to like, subscribe, comment down there at the bottom. Share this videos with others. Follow us on Twitter and Facebook. Like our content there. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.